The weekly Stokes are crossing up. The 5-day Stokes are crossing up. We got a green dot. This is only a short-term pullback. Everything else, the larger time frames are bullish. Let me show you that you are being lied to. It is simply not true. The large time frames, for example, the 5-day, weekly, 2-week, and monthly are bearish. There is nothing bullish about that. And I keep hearing out on the crypto interwebs that every move down is only a short-term time frame pullback and that there is momentum to the upside on the larger time frames. It's actually the exact opposite. Let me show you. Are you ready?
Hit the like button.
And subscribe.
Or else. Let's go! On the monthly chart, I'm going to zoom into the RSI. What you can see here on current price action or RSI action on the monthly is that the monthly is at, see this green zone, this rectangle here? It is both out of the green zone, so it being the RSI itself, the green line. This white line is the moving average of the green line, as if the green line were price itself, right? But it's the RSI. The RSI is both outside of this bullish control zone and it's under its EMA that is right here, this white line. In all of Bitcoin history on the monthly chart, there has never been one instance where both of those are true that has been bullish. For example, under this green zone here and under the white EMA as I'm tracing right here. Look, not bullish, not bullish, not bullish. So here it was above it. So that was moderately bullish this whole time, but it's both under that white line and under this green zone. Not bullish, not bullish. These were all some of the most bearish times in Bitcoin price history and Bitcoin price in the history of Bitcoin price. And I don't understand why folks are saying this is momentum to the upside. A lot of the things that you are hearing are about a weekly or a 5-day stochastics cross to the upside. But let's take a look at the RSI and determine, okay, what is the context of that stochastic going up within the idea that the RSI is under the moving average, that white line, and outside of that green box. Stochastics moving up doesn't mean jack in that context. Let's look. I'm now on the weekly chart. Typically, when the weekly is both outside of this green zone and below the moving average, each cross up of the stochastics simply gets a rejection. So this green gets rejected from the white. That's what the cross up typically means. And the cross simply does not go all the way to the top side. It does not get that momentum. The stochastics cross of, so this is the weekly RSI. The stochastics on the weekly do not get momentum to the upside when the RSI is both outside of this green zone and below that white moving average. So here, let's go back to December 13th. I bet you that the Stokes crossed up there, but all that it resulted in is this green getting rejected by the white. Go back to December 13th. Let's take a look. Here's December 13th, Stokes crossing to the upside. What did this result in? It resulted in the rejection from this white line. Actually, not even from the white line. It was such a small rally that it wasn't even powerful enough to get rejected by this white line. Let's go back to another point in time, for example, right around October 2019, but let's go back to somewhere like late September 2019, in which the stochastic cross only was able to get RSI up to the white line from which it got rejected. Take a look. Watch. I'm going to go back to roughly the the last week of September 23rd, 2019, so we can take a look. I'm on the stochastics. Here's the last week of September. The stochastics crossing up. We're bullish to the upside. No, you're not. All it's going to get you in the context with the RSI in a situation where it's trapped under the white moving average, especially when it's this low and way out of this green zone, is you typically just get a rejection and then you move back down until you start forming higher lows and wiggle out of it. So when you hear stochastic on a large time frame, 3-day, 5-day, weekly, being communicated to you that means momentum to the upside, it's simply false because of the context of the situation. And during bullish moves, when RSI is generally bouncing on top of that white EMA, yes, that is extremely bullish. The momentum is already up, but the stochastics themselves, as the RSI momentum is down and trapped under that white line, the stochastic cross up does not give you large time frame bullishness nor momentum. It doesn't give you either. And connecting the stochastics to the RSI typically match up with EMA crosses to the downside. So what we're going to do next is I'm going to show you, if you're more of a fan of EMAs like I am, then we're going to also be able to see the same type of thing when you start getting bearish crosses of the 10 EMA with the 21 EMA on different time frames. Turn on your camera and microphone and ask me questions directly and live straight to my face up to 8 times a week. Links to the Discord community within the description section of all my videos. Follow me on Twitter, cosasverdes with the number 2, cosasverdes2. If online communities are not your thing, so you don't have the time to commit, but you want exclusive content above and beyond what I offer on YouTube, click the join button below this video and another video pop up describing your options to you. So again, I am using the indicator called EMA fill. You can see it over on this section right here. It says EMA fill right around the point where I'm pointing. And all I did was I put on the 10 and 21 EMA and I made it so that it turns red when the 10, the smaller time frame goes below the larger one. That's bearish cross. In the context, so this is the 5-day chart. When the 5-day chart has this cross and it's red, the stochastics moving to the upside do not hold the weight that they do whenever the EMA fill is flipped green. So for example, the stochastic cross down here, you can see stochastics, they did not hold weight because this was red. Again, they crossed up, did not hold much weight because this turned red. Now, were those fairly big rallies? Absolutely, but it was not long-term time frame bullish. It was only short-term time frame bullish, the exact opposite of what you're being told. I'm hearing this so much out there, and you can't, it's literally the exact opposite of what's happening. I'm honestly baffled. Again, during this red portion right here, you had the stochastics cross up. Yeah, you got a rally, but it was only the short-term time frames that remained bullish. This time frame in and of itself, because of this cross. In addition, the RSI was stuck under its EMA as well, and I'll show you that here in a minute. Under the context with the EMAs flipped red and the RSI stuck under its EMA, it is not a bullish sign to have the stochastics cross up. It doesn't work like that. Now, was this an exception to the rule? Yeah, this one actually worked out. This was an extended bull trap in which price action was driven down by folks who were essentially printing an exact pattern out of a textbook, and it was completely different, and this actually did give a good signal. But of all Bitcoin history, I think this might be among the few exceptions to this rule. When the EMAs are cross red and the 5-day RSI is stuck under its EMA. Now let's put on the RSI itself. So let's check it out. During this whole red time on the 5-day chart, something I've been hearing a lot about, the Stokes, or even the weekly. Let's just call this the weekly and the 5-day. Very similar concept. As this is red, take a look down here, and I'll try to stretch this out here. Watch. The RSI was getting rejected by its EMA, could not stay above it. Therefore, these stochastic crosses to the upside down here, so these crosses crossed up there, went up, down, crossed again, down, crossed again, down, under the context that this is flipped red and that the RSI stuck under the EMA, those crosses are not bullish. It's only the short-term time frames that are bullish, that are pulling it up in order for the RSI to get rejected from its EMA, and the EMAs of price themselves, where you see that ribbon flip red. It's typically not enough to flip them to green until the RSI gets above the EMA. Above the EMA, that's what then flips that channel to green. Let's take a look. Look here. The RSI of the 5-day got above the EMA. Let's look. It got above the white line. See this? Green got above the white line. Let's put a marker right there. But those ribbons were still red. Look. Still red. In order to flip these from red to green, this first has to get above. And then then you can say, oh, this stochastic cross, actually, once it's finally up here, this could end up being fairly bullish because now, but after this stochastic came up, you could have had the sign that, okay, this stochastic cross up might end up being bullish because during the meantime, RSI got above the white line, and because of the effect of the stochastic cross and the green above the white cross, you can make the assumption that the EMAs, and thus price, will cross from bearish to bullish. You have to have that chain reaction. The Stokes go first, then the RSI of a large time frame gets above that white EMA, and then under those conditions, then you can start calling it bullish. And it happens in that order. But a lot of times, like back here, the RSI, these stochastics go down, cross to the upside. But as that crossed to the upside, you simply got a rejection. See that? From here, this is what the RSI did right there. And because it did not get above, you can say to yourself, okay, this is not going to be bullish, and this is not going to flip because the RSI did not get above the white line as the stochastics went up. And you could have said the same thing until about this point right here. And once this got above the white line, you could start saying to yourself, okay, this actually has a chance to be bullish, and this red channel has a chance in the near future, after several more 5-day candles, has a chance of flipping green. First the Stokes, then you have to see the RSI get above its EMA on a large time frame like the weekly or the 5-day, and then you have a chance of this channel flipping red and the overall trajectory of price being bullish. But until that chain reaction happens, it's truly only the short-term time frames that are bullish, and each pullback that we have, it's simply these short-term time frames then aligning with the already bearish longer term or larger time frames. It's not just a short-term time frame pullback. That's not what we're seeing. This is a macro large time frame pullback, and any move to the upside is simply a correction of that down move. So during up moves, you have corrections to the downside, right? It goes like this. Well, during down moves, you have corrections to the upside as well. And each of these stochastic things to the upside that maybe look like momentum, and typically they hold a lot of weight when there is a bullish type of structure. But in a bearish sentiment, when things are trending down, it only means that the RSI is gonna most likely go up to its EMA, get rejected by it, and until the RSI gets above and uses as support, you should not be assuming otherwise. Click this video right here if you missed my Bitcoin analysis from Saturday. Bitcoin's hanging on an edge. You really should watch it to see what might happen. Click this video right here if you want to learn how to set up a chart just like mine. It's a 28-minute trading view tutorial built just for you, assuming that you're new to crypto, and click the circle in the middle if you're new to my channel. You just got 𝘾𝙤𝙣𝙣𝙘 worldwide. Peace.